Are you ready for what the housing market holds in 2025? With mortgage rates still high and home prices continuing to rise, it's easy to feel uncertain about buying or selling real estate next year. But what if I told you there's a silver lining? Zillow and Fannie Mae are giving us their predictions, so stick around while we break down what's coming in 2025, from home prices to interest rates to inventory levels. Because maybe 2025 is the year that you want to set some real estate goals and make your move in the market. I'm Angela, and if this is your first time to our channel and you want to know all about Cincinnati, Ohio living, then make sure you hit that subscribe button and tap the bell for notifications. That way you never miss an update. And if you're thinking of making a move or investing here in the Cincinnati area, you can reach out to me at 513-951-3584 or email me at ange.sells.cincy@gmail.com. And one more thing before we jump in. If you know someone that might find this video helpful, hit that share button and send it to them now. So I want to start out with saying that you shouldn't always believe headlines, right? Headlines are always fear-invoking or, do something to grab your attention. In this particular case is no exception. The first sentence of this article says, erratic and dramatic mortgage rate movements that heavily influence the housing market in 2024 are destined to play a major role in the coming year, according to Zillow's latest market report. They wanted to grab your attention, and I'm sure they probably did. But quite honestly, the big takeaway is that mortgage rates should improve gradually throughout the year, which could spark some much needed activity in the housing market, but might have a few bumps along the way. That doesn't really sound so erratic and dramatic to me, but Skylar Olson, Zillow's chief economist, said that declining mortgage rates are likely to help home sales grow and home prices to appreciate by about 2%. As Olson puts it, those shopping for homes in the winter months will have time to choose and might be in a strong position to negotiate, but they'll also need to be prepared for some unpredictability in mortgage rates. In fact, Zillow expects the number of home sales to increase slightly in 2025 from about 4.06 million in 2024 to around 4.16 million. While Zillow says that new listings are still below pre-pandemic levels, about 14% less, they've seen an improvement compared to earlier this year. The market still has a lot less inventory than we'd like, but things are looking a little bit more balanced than they were in March of 2024. It seems like the housing market is moving closer to historical norms, but it's not quite there yet. Here in Cincinnati, we have about 1 to 2 months inventory, while nationally that has gone up to about 4 months of inventory. And just for reference, a balanced market is about 5 to 6 months of inventory, which we haven't seen since before the pandemic. All right, so I wanted to break down some of the Cincinnati housing stats for you from the last few years to the last few months. So the data I'm going to share is relevant to residential properties, single-family homes, and condos. So in March of 2019, there was 3,783 homes on the market. We call that active inventory. The median selling price was about $170,000, and the median days on market was 7. So remember, this was about a year before the pandemic really blew up. In March of 2020, right when the pandemic was shutting everything down, the active inventory was 2,759, with a median selling price up 14% to $195,000, and the median days on market was just 4. Then, in March of 2021, the median selling price jumped 12% to $220,000, with the active inventory at only 1,220. That was a 55% drop. And the median days on market was just 2. Then March of 2022, inventory was still extremely low at 1,271 units. Median days on market was just 3, and the median price jumped about another 12% to $248,000. So it's important to note that in 2020 to 2021, interest rates were at an all-time low, right around 3%, sometimes even dipping right below that. This was due to the Federal Reserve's aggressive policy to keep borrowing costs low during the economic slowdown caused by the pandemic. Then by the end of 2022, interest rates were actually peaking at right around 7%. This leads us into March of 2023, where the active inventory was 1,509. The median days on market was just 3 still, and the median selling price was $246,900. This was a decrease in the median selling price, but that was only like a 0.5% decrease. Okay, and then coming up last to March of 2024, active inventory was 1,566. The median days on market was just 4, and the median selling price saw another 13% increase, up to $280,000. So as you can see, just when we look at March over the last several years, you can see how that number went significantly down during the pandemic. And then as interest rates went back up, the inventory started to rise back up a little bit. Okay, so one other aspect of this that I want to kind of dive into is just for this particular calendar year, 2024. I just want to kind of show the shift in how the inventory has been increasing here in Cincinnati. So in January, the active inventory was 1,685, which was a 5% increase from the prior January. In February, it was at 1,561. In March, that number was 1,566. In April, it was at 1,789. In May, the inventory number jumped to 2,101, which was almost 30% higher than it was the prior May. In June, the inventory was 2,320. July, that number was 2,681, which was a 54% increase from the prior July. In August, the active inventory jumped up to 2,845. In September, it was at 2,923, which was a 41% increase. In October, it was 3,151, which was a 43% increase. In November, it was 2,945, which was a 43% increase. The active inventory as of today, at the time of this video, during December of 2024, is right around 2,700. So I wanted to point that out because you can really see how the inventory has increased over this year. And the market has kind of started to shift. We have started to see a little shift in the days on market and that price point. While prices are still appreciating, they're just not appreciating at those crazy levels that they were during 2020 and 2021. All right, now let's talk about Fannie Mae. I laughed when I saw the headline for their article, which was that their forecast was meh. Unlike Zillow, Fannie Mae doesn't foresee dramatic changes in 2025. According to Fannie Mae's forecast, basically, they said we're likely to see a similar situation as we did in 2024. Mortgage rates will remain elevated, staying above 6% most likely, and home affordability will continue to be a challenge. As for the housing supply, Fannie Mae also expects it to remain tight, still well below pre-pandemic levels. In short, Fannie Mae's outlook for 2025 suggests a relatively stable market with only modest improvement. So Fannie Mae's economists predict a few key things for 2025. First, the average mortgage rates will likely decline slightly, but stay above 6%. However, volatility or unpredictability will be present, which could create some opportunities for homebuyers to jump in when rates dip temporarily. But overall, don't expect a massive surge in activity. But I want to point out that with those dips, tends to come more competition because more buyers decide to come into the market. So while this is good if you are a home seller, it may not be so ideal if you are a buyer because you're going to have more competition, which is ultimately going to drive that price higher. So really, I always just say buy when it's best for you and try not to worry so much about the interest rate. You can always refinance if rates do drop in the future. So that's something to keep in mind. And if rates go up, then you're going to be happy you bought when you did. Fannie Mae also predicts that the existing home sales will remain near 30-year lows, with new home sales being the standout performers, especially in regions where new construction is more feasible. There are a ton of new construction developments here in the greater Cincinnati area, and I actually tour some of those in my videos here, and I'll link to those in the description box below so that you can check them out after this one. And if you're thinking about new construction, make sure you check in with a local realtor first, like me, before you go visit that model home. It's important to work with a market-educated agent who can help you navigate the complexities of buying or selling a home. So overall, a lot of the experts are saying that interest rates are still going to stay relatively high, at least high compared to the 3% that we saw during the height of the pandemic. but historically are still really low. And also that home prices are going to continue to rise, but not as drastically as they did before. I hope you found this video helpful for some of the changes that we're going to see in the housing market as we head into 2025. If you did, would you please give it a thumbs up and make sure you hit that subscribe button so you don't miss out on future updates. The market nationally and also here locally is shifting, which could impact the affordability and availability of housing. It's important to work with a local agent that you trust who can guide you when you're buying, selling, or investing. I'd love to be that agent for you, so don't hesitate to reach out now. You can call, text, email, book a Zoom call. All that information is in the description box below. Even if you're in the very beginning of your real estate journey, maybe you're just now starting to think about moving or selling your home or buying a home, or maybe you want to invest in rental property for the first time. I'd love to help you with that. But it's important to make sure that you're able to make decisions based on what's best for you at the current moment. And that's what I'm here to help with. And I'd love to hear what you think the 2025 housing market is going to bring. Drop a comment below and let us know your thoughts. Do you want to know how the upcoming Trump administration could impact the housing market? Make sure you check out this video here. And before you go, hit that share button and send this video to a friend. I'll see you next time.